Hey, good morning, everybody. This is Trevor. Today we have my longtime friend, my best friend since my freshman year in college. We've been friends for 32 years now. Paul, thanks for joining us today.
Thank you, Trevor. It's really excited to be here and excited to see what's happening.
So, what are we going to talk about today?
I just recently inherited real estate and I don't even know where to start. I'll give you the breakdown real quick. It is 4 duplexes, all upgraded, all free and clear, and all rented, and they're all located in Colorado.
Okay.
Yeah, I'm in Southern
Yep.
California. So that's one of the many hurdles that I am being presented with. And so here's my first question. Do I even want to go there? Do I even want to deal with this?
Yeah, there's a lot to think about there. The first thing is it depends on your goals, right? I assume you're already investing like 401k or an IRA or things like that. Is that correct?
Correct.
Okay. With real estate, I think we've talked about there's 4 ways that you can build wealth in real estate: cash flow, appreciation, principal pay down, and tax benefits. Everybody wants to grow their wealth, but certain people want to emphasize one of those 4 things more than others based on what their goals are. So let's talk about your goals real quick. Do you have a particular need for, say, monthly cash flow?
Here's what I want out of this. And if I were to just make it like a fairy tale, I'd want cash flow from the properties. I'd want as little hands-on as possible. Basically, I want a check in the mail. I want nothing to do with it. I just want to say, where's my money, and let it flow and have as little to do with it as possible. If I can get some tax benefits out of it, I didn't think about that. I didn't realize. That's why I call you, because I don't know what I'm doing. The tax benefit would be cool because I'm screwed in California. I'm getting taxed through the roof. So if there were any type of tax benefits, it never crossed my mind because these things are in Colorado. If you can make that happen, that'd be slick. But that's kind of my thing. That's where I'm at.
Thank you for elaborating. That's great. And based on what you're telling me right now, you've got 4 duplexes, which is 8 units. And if they're free and clear, that means they have no loan payments. So you are capturing all the cash flow, or you will be capturing all the cash flow you get off the properties. The next question, you want it to be mailbox money. So you just want to be able to pick up a check each month. So
Yep.
you want to be passive. Are the properties currently being managed by a third party, like a professional property manager?
It was being managed by my father-in-law. He was the one running the show, and he passed away. The widow, she was involved while he was running the deal, but now the daughter has stepped in. Her daughter, not his daughter, her daughter stepped in. So the two of them are now managing the property. I don't know any inkling about how well they're doing or what any part, if they even know what they're doing. I'm assuming they know what they're doing because they're doing it. I don't know if they're paying anybody else to help them.
Okay, good to know. That's probably a really important point that we should talk about. Is there are 2 elements of managing the properties: is the day-to-day management, which is the property management, and then there's the managing of the business, the overall asset management. And that would be handling the sale, handling any sort of financing. I do recommend, especially if people have never managed property before, that you insist on getting a third-party, professional, experienced, reputable property management firm to take over, or a property manager that's been doing it a long time, because there are so many things that need come into play. A lot of moving parts, a lot of laws and regulations, tenant rights, landlord-tenant issues. I don't know what your experience level of the people who are currently managing it, but if this is something you intend to hold for a long time and it's halfway across the country, I would probably recommend that you look into interviewing professional property managers.
Okay, Denver's not that far, dude. So just so you know. So there you go. There's one of your other shortcomings. Your geography is way off, dude. Denver's not that far. Let me paraphrase what I'm hearing you say. You're saying that the property manager is the one who deals with the tenants. So if people want to rent or get out or evicted, they're the ones that deal with all that kind of stuff. Is that what I'm hearing you say?
Correct. Yes.
Okay, so property manager is the one dealing with the people and the units. Okay.
The day-to-day operations. Yeah, exactly.
Okay.
Most states have a lot of laws and regulations around how you can manage properties, how you can treat tenants, how much you can charge them for, say, late fees, or how much notice you need to give them if you want to go and inspect the unit. But the property manager is the person who handles all of the interaction with the tenants. And like you said, leasing, fixing broken faucets, collecting rents, and usually paying a lot of the bills.
So you also said there's an asset manager who manages the manager, and you said something about that being part of loans and things like that on the units. These are all free and clear. So would I need that? Do I need that second layer if all these things are free and clear and all I'm doing is paying property taxes?
Oh, typically I would say no. You and your wife are going to be what I would call the asset manager, But sometimes when you get into having like a large portfolio, you had loans on all of these properties, and maybe one loan was coming due this year and another loan was coming due next year. You didn't want to sell the properties, you wanted to refinance. That would not fall under the responsibility of your property manager. They don't deal with that because the asset manager is basically a representative of the owner. Most of the time, the owner is the asset manager. But I think it's important to make a distinction between those two functions. Property management is day to day, asset manager oversees the business, which is a great segue into our next thing, which is the tax benefits. Because let's say you wanted to capture more tax benefits, or you wanted to pull some of the equity out of the properties by getting a loan, cashing it out, borrowing against the property so you could go buy more. A lot of times what we see in real estate with regard to the tax benefits is people might, maybe a doctor or a lawyer, they have high income and they're in a really high tax bracket. And like you said, you're in California, so your taxes are pretty high. A lot of people really need more write-offs. And when you have a loan, just like you're able to write off the interest expense on your house, you can write off the interest expense on your investment properties too. And you can also take some depreciation and amortization. And that's more of a conversation to have with your accountant. But the point there being, those are non-cash tax benefits that you can write off a portion of the value of the property every year. And you'll still capture those because you have the investment property. But if you decide that you want to grow your portfolio by using the equity that you have in the 4 duplexes, you will actually capture more tax benefits than you're capturing now.
So then you'll have interest to write off and whatnot.
Yep.
Interesting. Okay.
If you have the time and the energy, and it sounds like you do, it doesn't sound like you want to get rid of these. And if you did want to get rid of them, you'd have to figure out, okay, what am I going to do with the money there? And then you'd have taxes of potentially to think about. Do you have the desire to grow the portfolio even more? Is this something that you want to dive into?
Real estate investment was never really a thought before this. I have a house, but having other properties was never part of my thinking until this. So this basically is like kind of a paradigm shift for me to go from not thinking about it to actually having it. If I can realize the value of all this stuff, once I can, see the check in the mail, so to speak, I don't think I'd want to get rid of them. If I see the benefit, I would probably want to do more. If it's as beautiful as it sounds like it could be, I would totally want more of it.
Good. Do you want to talk about maybe some potential pitfalls to look out for or mistakes to avoid?
I'm afraid of one, paying too much, so to speak, that you're like, oh crap, I didn't realize that or know that, or that's going to cost way more than I expected. I don't want to get ripped off, and I don't want to make a bad choice. I don't want to go in and it all is all smelling of roses at the beginning, and I turn around and I'm upside down in a pit. It's just the fear of the unknown. So basically, not knowing what I'm doing.
When you say overpaying, obviously nobody wants to get ripped off, and you're talking about maybe overpaying for the management, things like that, or overpaying or
any of it. Again, Trevor, I don't know. Overpaying for the property. If I'm investing in a property and I could be overpaying for that. I don't know. And not doing my due diligence and finding all the things that need to be found before I say yes to something. And then, of course, how do I go out? And the second part of your response was, how do I go out and find the right property manager? Would I do that? How do I find the guy who's going to really work on my behalf and not try to rip me off?
Exactly. So let's tackle those one by one. The most important thing is doing your due diligence, not only on the property, but also on who's operating the property. And one thing I will tell you is don't necessarily trust the reviews that you find online, because most of the time when people leave a review for a property management company, it is because they're mad at the company because most likely that company was enforcing the rules. And I will tell you that with property management in particular, reviews can be a little bit misleading. So what you want to do is interview property managers in the area. Make sure, one, that they specialize in duplexes. Not all property managers do small properties like that. Some of them will only focus on large apartment complexes. A duplex is considered a residential multifamily as opposed to, say, like a 100-unit apartment complex. There are different skill sets involved. Find property managers in the area that specialize or that already have duplexes in their portfolio. Okay, that's the first step. The second step is to interview them and ask for references. And you can interview them over the phone, ask them what services they provide, how much they charge. You're probably going to be looking at about 8 to 10% of your gross rents as a management fee, plus expenses.
Say that again?
So
8 to 10% of my gross rents?
yes. Yeah.
Okay.
So property management fees, most of the time, not always. Sometimes people can negotiate a flat fee, but generally speaking, property managers charge a percentage of the gross rent. And that actually aligns their interest with yours because the more money you make, the more money they make. And so that's one thing is you probably expect to pay about 10% of your gross for the management of those properties. But first, go find people that manage duplexes already and have experience. Do not be too price conscious. Saving 1 or 2% is not worth hiring a bad manager. And you say, hey, I need references from you. I don't want to just go off of reviews I find online. I want to talk to some of your other clients, some of the other owners that you manage properties for. And then you check those references. Due diligence is so important. It's the most important thing that you need to do. So if you want to find a good quality manager, interview several that you can find. Hopefully you can find them in the town where these properties are located.
Yeah, it's a small town. It's growing, but I could imagine there's a whole lot of these property management companies in this particular town. Now, do they have to be nearby though? How far out should I be looking? Is this guy going to drive an hour or is he going to only drive 10 minutes to do his work?
I would say, yeah, you don't want anybody that's more than about an hour away.
Okay.
There's a saying in property management that you are only as good as your on-site presence. You're only as good as your boots on the ground. You need a competent manager overseeing the property that is going to be there and is going to be attentive. I could tell you some horror stories about hiring the wrong manager. The second part of that is you don't want any bad surprises. So the next phase of your due diligence is doing due diligence on the property. And another huge mistake to avoid that's very commonly made, not paying for a qualified inspector. And what I think is really important, because you're going to need, if you decide to keep these properties, you're going to need to plan out your budget and any capital improvements you might have to make. So for instance, if one of these properties needs a $100,000 roof put on, you want to know that now, right? Or if it's got failing appliances or leaking faucets, you're not going to know this until you do your due diligence on the property. So my recommendation on this phase is hire somebody competent, and then somebody on your team, either you or one of your family members, should go out there and attend the inspection with a professional inspector. And you want them to look at everything from the grounds to the building envelope to the plumbing systems, the HVAC, the electrical, everything. And it might cost you $1,000 to inspect all 8 units, probably not even that much. Just depends on how big they are and what condition they're in. But don't skimp on that. Make sure that you hire somebody, again, really qualified that has experience. If you're not sure about their qualifications, always ask for references. But what this will tell you is what you have to expect. And then if you do need a $100,000 roof, you can decide, okay, do we have that money set aside? Do we need to start setting aside a little bit each month for when that does happen? Or do we potentially need to go and refinance the property to pull some cash out to put that roof on? So that's the second phase, is the due diligence on the property as well as the manager.
Okay.
And then your third point was you don't want to lose money. You're doing your due diligence on the team that you are utilizing to manage the properties. And you're talking to your accountant, you're talking to your attorney, and you're not making rash decisions or emotional decisions or uninformed decisions. Your chances of losing money go way down. You're going to have insurance on the property, and you're going to have somebody competent overseeing the property, continuing to keep your tenants happy and continuing to maintain the condition of the property. Then you're probably not at very much risk of losing money. I think you're going to cash flow quite nicely out of these.
That is good to know. That's very good to know.
Yeah.
Now, let me just flip the switch right here. What are the benefits? What if I were to just say, you know what, I'm selling everything, cash out. So what happens to me then? Am I screwed or in taxes, or do we even have that conversation? Because I know that's not what you do. You don't sell them, you buy them. So I understand that, but we said that at the beginning of this conversation. If I were to go back to that, would you have any advice on that at all, Trevor?
I would. And I do prefer to buy, but I also say never be afraid to sell. Generally speaking, if the property is already optimized and it's not really going to go up in value very much anymore, maybe your rents are way above market or whatever, or you have other goals for that money that you could use if you turned that equity into cash, you may have other things that you want to do with that money. So don't be afraid to sell. It's not wrong to sell. And you asked about tax consequences. In your case, and just as a reminder, disclaimer, I do not give tax advice. I'm not an accountant. So I always say anything that I say, I suggest you run it by your accountant. But typically, when you sell a property, if the property has appreciated in value since you acquired it, you'll have capital gains, and then you'd have to pay capital gains taxes on that. There is something that happens when you inherit real estate called a stepped up basis. Let's say your father-in-law had sold the property before he passed away. He would have had to pay capital gains on the difference between what he paid for the properties and what he sold them for. However, when you inherit real estate, your basis is whatever the property was worth when you inherited it. So if you turned around and sold it right away, you probably wouldn't have a huge capital gain, but you never know. So again, it would be a question of talking to your accountant and saying, what would be the consequences if I decided to sell this property today?
Okay.
I would say if you can find an experienced property manager, then you've got two of the boxes checked, cash flow and passive, and your accountant can tell you whether or not you've got the tax benefits. But going back to the question of if you did sell, where would you reinvest that money? And would it be as good of an investment as what it's already in?
So I think the only reason why we would sell out is we wanted to do something else with the money. Like if we had a specific need or a desire of some sort that we wanted to go out, go buy a motorhome and travel around the country or something. I mean, you can't just stick it in the bank. Where does it go? Because now that we talk about this, Trevor, and having this conversation is really helping me a lot, because now I'm understanding that it wouldn't be that hard to sit back and collect checks from this place. I don't need cash flow. I don't need a bunch of money. I don't need any of that right now. It might be easier to sit back and just collect a check.
Yeah.
That's better. It's way better. So you're right. I don't have anything else to do with it.
Not everybody would have that same answer, because let's say like a couple where both people are working full time and managing the manager out of state and checking the books and auditing and making sure that everything's being run properly, that still takes time. One thing I would say is just recognize that if you want above average returns, most of the time you're not going to be truly passive. You are going to have to manage the manager. You want to review the income, the expenses. You're going to read the property management reports, and you may find that even that amount of management that you have to put in, even though you're not overseeing the day-to-day, that might still be too much. So then you would say, okay, my goals are to be more passive than even this. And then you find another alternative.
Okay,
so if you did sell, what would you do with the money?
I don't have anything to do with the money. If somebody dumped $2 million in my pocket, I don't even know what I would do. I'd just stick it in the bank and figure it out. There's nothing other than travel. My wife and I love to travel. So will we take $2 million and go in the bank, and could we spend $2 million in traveling? Probably, but it would take us an awful long time. But that money would sit there and rot. Really, it wouldn't do anything for me. And if I had that kind of money, I'd want it making at least 7 or 8%.
One thing I'd like to do, if you want to keep this conversation going over the next few months, is I know I would like to follow this journey with you, because I'll tell you, you are not alone. A lot of people are inheriting property and they're faced with these same questions. So if you're willing to continue to share, I would be excited to have you share the steps and the decision making and whatever challenges you run into. I think it would be really valuable for a lot of people.
I would love to share that. I think it's a great journey. And again, this may take some time, and I'm excited to find out how it turns out too.
Yeah, it's going to be an adventure. But congratulations. I am sorry for your loss, for your family, but hopefully, we can go on this journey together and make the most of it. Any other questions today?
I've wrapped my head around a lot of it, and if I would ask anything else, I would explode. So right now, I got a lot to think about.
Thank you so much for joining us. And everybody watching, of course, if you have comments, questions, or feedback or input, put it in the comments or shoot us a note. And thanks for joining the discussion. Thanks for watching.